friends, I am Megan Teal with Cornerstone Home Lending, and I wanted to talk to you about unimproved taxes on your new construction home. So when we close, our goal is to set you up for the absolute most financial success in this mortgage that you can have. However, a lot of times when we are dealing with a property that's newly constructed, there's an unimproved taxes situation that we have to address. And it's critical for us that you guys understand exactly what this means so that you can make the best decisions for your family. So the question is, what is unimproved taxes? What does that mean? So every year, the county, wherever your home is going to issue a bill for your property taxes, okay? The way that they determine the amount of that bill is that the county appraisal district goes out to your property periodically, and the county appraisal district will determine a property value for your property, okay? Then they're gonna deduct out any exemptions that you have. The most common one is the homestead exemption, which gives you a reduced amount of taxes owed. They're gonna multiply that by the tax rate for your particular property, and that gives us our annual taxes. Very simple. The part that can make it confusing is when your home is newly constructed, there's a period of time that the county does not know that there's a house on that land or that there's a completed house on that land. So in this calculation, your property tax value may be $10,000 because that's the value of your lot. So your annual taxes at the end of the year may be $350 in year one when we're setting up your closing. We know that at some point they're going to figure out that there's a house that's worth whatever on your property and that they're going to readjust your taxes. And that can happen over time as your property appreciates, which is the goal in investing in real estate. Your taxes can increase over time. So in all of our loan estimates, etc., we set up the number in your payment to assume that the county values your property at the price that you pay for it. We assume that you take the homestead exemption, which you can take after you own the home on January 1. It's about a 20% discount. And we assume the tax rate in your area, which we're able to verify in advance. And that's how we set up kind of what we can expect the taxes to be. But in real life, when your loan servicer gets it, etc., they may change your taxes to match what the tax bill says because that technically is correct. And so you need to know that if you get something in the mail or you get a call that says, hey, you only need to pay $52 a month in your property taxes, you'll know that that's why this is happening. And that if you choose to pay just the tax bill that's owed on unimproved taxes in year one, which is absolutely, you're right, you don't have to pay more than is owed, when the taxes adjust up, the payment will increase. And if there's a shortage in your escrow account, let's say because you've been paying $50 a month in taxes all year, and then the county assesses your property in November for this year, and they send you a bill in December, and you've been underpaying your escrow account each month, there's gonna be a shortage, and right around time that it's time to buy the kids Christmas presents, you're gonna owe $3,000, $4,000, sometimes $5,000 in property taxes. Give us a call. We'd love to talk to you in more detail about your specific situation and what we would recommend you paying and that type of thing. But this is kind of how unimproved taxes work with new construction and why we go ahead and set up your account when we close to show the fully improved amount of taxes. The great news, guys, is if you overpay taxes at the end of the year, you've paid $5,000 and the bill's only $300 because they didn't appraise your property, you get the money right back from your servicer. Call us with questions. We'd love to go in deeper with you. Have a great day.